Hey, what's going on, guys? This is Jimmy with Just Hit Trading. Today is September 18th, Sunday night, and futures open for a little bit. And so, what I want to do is just go over what I'm watching for a week, the weekly watch list, and then we'll go from there. So, first up is, as always, we want to take a look at the overall market. So, the first one is ES, then we'll take a look at NQ shortly after. So we actually have some pretty critical events coming up this week. We have unemployment data coming up, as well as Jerome Powell and the Fed meeting on Wednesday. So whenever we have those giant catalysts, especially on Wednesday, which is once a month for most part, where you can really expect some choppiness come Monday and Tuesday, and then on Wednesday, um, that's when the big event happens at 2:30, followed by the press conference. So 2 o'clock is the actual minutes released, and 2:30 is the actual conference. And what that's going to be impacting is the Fed rate, right? So I think a lot of what's priced in is a 0.75% rate hike. There's a potential chance of a 1% rate hike based off of some of the inflation data that we saw this earlier this month, and we can kind of see what this giant red candle um, really came about from the CPI data, right? The CPI data showed an increase in goods. I know energy came down, but shelter and some food and whatnot, those are continuing to go up with no top in sight yet. So until that really comes down, I think the Fed will still keep on raising rates, and then we really need a real strong catalyst before we really get back into a bull market. So without further ado, let's take a look at ES and what we have for the week. You can see, about a few weeks ago, we had that rejection of the 200 simple moving average. So we are using that as the top of our Fibonacci retracement. So from the bottom of 36.39 to the top of 43.27.5 is our Fibonacci range. Prior to this, I did have a range going from this top to about the bottom here because it looked like we were breaking out this downtrend. But since we had that CPI data and rejected pretty hard, I reverted back to the Fibonacci retracement from 36.39 and to that top. So another thing that we also have right here is the this lower trend line. It's been respecting it for quite a bit, but we did break below it on Friday. And right now we are slightly red, negative 8.25 on futures from Sunday night. So, we had this hammer candle, and a lot of people were thinking that this would be very bullish. But I wanted to point out that Friday was actually quad witching, and quad witching was when a ton of trillions of dollars of options actually expired. And I mentioned this in my Discord uh, on Friday that 3,900 on ES is the max pain level. So what does that mean? Max pain level is when all the options expire worthless at a certain dollar amount. So the market makers, they want to um, hold the price of ES above 3,900 because that's where all the money was. So that means that the market makers would be making money opposed to everyone that's actually buying and selling the options, right? So we look closely. I'm on a 5-minute chart right now. You can see on Friday afternoon, we closed just over 3,900, so 3,902, 3,902.50-ish, right? So what that means is anyone that sold puts underneath 3,900, they all got clapped. They all expired worthless, and it was the market makers got all that money. So there was potential that this was going to keep going up today and going to next week, just because if we go back to the daily time frame, we have that, we were looking at that hammer candle, right? So a hammer candle right here is essentially the small candle buy up top with a long tail or long wick. So, that was the sign of bullishness, but to be honest, I actually wanted to swing a put into because I thought about that max pain theory. So here we are, we opened up below 3,900 and we are slightly red, but we're in this demand zone. And so this is actually a daily demand zone. If we look back to July 18th, we formed this daily demand zone. And so we are, for now, we're making a lower, a higher low, right? So there's a chance that we could still push back up, uh, uh, but we did fall out of the trend. So I mapped out a few key areas, right? This demand zone also coincides with our golden pocket, right? Anywhere between the 61.8% fib level all the way down to 70.6 is really the golden pocket. 707 is really a sweet spot. We could test that. If we do test that, I really think that we will probably continue going down because there's all this demand right here that if it's not getting bought up right now, psychology tells me, why would you buy it down here? Right? I mean, you're falling out of trend. It's very risky. So I think as a buyer, if you failed at these levels where there's clear demand, then you're really catching a falling knife if you buy any further down. But who knows? The market can go any direction really. So there are a couple of scenarios. Two scenarios I'm really looking at. One is we hold this demand zone, and our bullish scenario is that we are going to point. We are going to. Let me just draw the trend line. Right, probably going to bounce down. Right here in this demand zone, bounce up and target this supply zone, this daily supply zone. So we have this drop, nice base candle drop, and this is at 39.56. If we do get to 39.56 without much buying pressure, without much buying volume, I will look to get puts at this level in SPY or SPX to go right back down to that demand zone if no demand zone has formed overnight or in the coming days. But again, there's chance for chop going into Wednesday. So that's scenario one, is that we base out down here at this demand zone and we retest that supply zone, and I would be looking for puts because I am not bullish whatsoever without a strong catalyst, right? Second scenario is, now that we are red, is that we fail to hold this demand zone, right? So I would be looking for a break of Friday's low. So if I put this here at 38.53, if we break 38.53, I would be bearish because we are really falling out this trend. Because we are in this golden pocket, I would be hesitant and I would size slightly, especially going to the FOMC meeting on Wednesday. But those are the two scenarios for ES. All right, so let's jump over to NQ. NQ on the daily time frame, we have this very similar setup. We actually had that same demand zone if we look on NQ, but we did fail to hold a demand zone, right? We invalidated with this wick down here, so this actually gives me a little bit more context as to a bear scenario, right? Because that candle invalidated this demand zone, I would think that buyers are pretty relatively weak, even on SPY, on ES. So I would see more room down. But either way, we can bounce, and same thing applies where we're in this golden pocket, and if we do retest that same daily supply, which is at 12,128.65, that gives me more confirmation as to if ES is going to fail. And I actually do play SPY a lot more than the Qs, but it's a very similar setup. All right, and then I have handpicked 3 equities. We have Amazon, Tesla, and Boeing that I want to take a quick look at. Actually, there's one more, a really big one actually, which is NVDA that I also want to look at. But we'll first start out with Amazon. So Amazon, same thing with the indexes, especially since ES and NQ, a big part of the holdings is Amazon and some of these high-tech companies like Apple, Microsoft. So it's not a surprise that we see a very similar chart. Same thing on Friday, we had a hammer candle that closed. We are slightly above the golden pocket, but we do have room down. But what I do want to point out is that we do have this gap fill. This gap fill going from 124 to 125.5, that's a decent move if we do fill that gap, and it will retest that trend line. Uh, Testing that trend line, that would be my profit target. So if we break above 124, I would target 125.5. Yeah, it's not that big of a move, but it is something I would consider looking and playing for a nice scalp. And actually, just jumping off back to ES real quick, is that I just want to point out right here, if we look, this orange EMA, this is actually the daily 9. So currently this coincides with that daily, the daily supply, right? So you can kind of see a pattern here between ES, NQ, AMZN, and probably even the other tickers I'm going to mention, is that, we have very, not much room to upside, but it is a part where you can either play to upside to do a gap fill, and then play puts to for a rejection if that put level to 125.5 holds. That's my the general theme of going into this week, is that we're not going to see massive moves until post FOMC, but at least in the meantime, we could see a little bit of a rally to fill some gaps and then validate these supply zones. All right, next one I have is Tesla. Tesla is interesting because we actually broke out of a bull flag, right? This giant one right here. And then we formed a small demand zone right at 292.9, and we are still validating and holding the daily 9, right? Another thing is that after we broke out this bull flag, we're actually forming a bit of a ascending triangle right here, right? So I would look to see really if we break above that wick, 309.43. That would give me upside to 314.67, which was the most recent top. And then we have targets from 318.5 and 325.38. So these two are a little bit further, so I probably will develop some more levels between. But in the meantime, with this breakout of the larger bull flag, in addition to, if we look right here at the TTM squeeze, right, we have 3 black dots. So we could be releasing to the upside for a quick release. We also have the EMAs crossing, so we have the 9, 21, and the 50 all pointing up, curling up. So I think that's good for the bull side. And something to note is that Tesla has a lot of relative strength, and what that means is that on days where we go back to ES and Q where it was selling off, right, these giant sell-offs, Tesla had very good strength in that it held all these levels and even bounced back. So this was this red candle, the basing candle, that was actually the CPI data on Wednesday with the gap fill, right? And then the next day it actually recovered all of that, and then it even went past the previous drop, right? So we look at this wick, it was even higher than the 912 candle. So Tesla has very, very good relative strength. So we'll look to see we get some more upside with Tesla. All right, next one we have is Boeing. All right, you can see one key level right here is this 141 to 140 area, right? We made these higher lows before. I'm sorry, like lower highs really, relative to this downtrend, lower highs. So we had a lot of candles closed or worked up around this level 140.55. So I'll be looking to make sure that this is a good solid support. But so if we hold this 140.55, we could see another retest of a weekly supply zone at 152.39. So if I switch over to weekly, it's actually a very clean weekly supply zone right here, 152.39. So it's really, if we look to hold 140.55, that would be a good entry for calls. And obviously it depends on what the overall market is looking like, but it's not too bad of a play. It's not a top tier play, but it's something I am looking at. The top tier play is next, which is NVDA. So let's take a look. NVIDIA, one thing to note is I want to start off actually with the weekly time frame. If we take a look at the weekly time frame and we're looking from Fibonacci level all the way back from March, looks like March 16th, all the way to the very top back in November. This is all last year, right? We have our Fibonacci levels, and what it shows us is that we are actually in the golden pocket again, in this giant retracement. You can even kind of point this out as like a giant bull flag in a way, or a falling wedge. We have a lot of consolidation previously in this area, right here in the 120s to all the way up to the 150 range. So there was a lot of consolidation previously. So it is a good area for longs. And something to really point out is right here, this white line. This is actually our 200 weekly simple moving average. Look how closely it wicked off of it, right? So this is a pretty good sign. So from this and knowing that we held this line, it gives us some good context to play longs if this level holds. So now that we looked at the weekly, let me jump back to the daily, right? We have that strong support which coincides with that weekly 200 simple moving average. And actually, let me even write that. Strong support, 200 weekly. I'll probably um, rename this later. Actually, I'll just rename it now because sometimes when I trade on mobile, it's, these names are so long that it's kind of hard to see. So 200. So I'll just know going into this week. One thing to note here also is that we're in this really big consolidation area that we looked at earlier on the weekly time frame, and we're holding the support. Um, we actually have a bullish divergence. So what that means is, if we look at the RSI down here, you can see if I make a trend line, right? We're actually making these higher lows, right? We have this peak, this valley down 27, and then we got up to about 30, 29, 29, 30, right? While the stock is going down. So if we see a trend of the stock price going down, but a RSI divergence of it going up, that's very bullish. And even if you were to kind of look at patterns on the RSI, right? It's almost like a falling wedge, right? If we do that, right, to this channel, so it can break up to the upside, which I do see happening on the actual stock price as well. It's been beating down so much that we can test at least the daily 9, and then we even have this probably a good supply zone up here at 143. So the less risky play is really to get shares, which is what I do plan on doing. I did accumulate some shares throughout this past week, and I will continue to get some more. But as we hold this, if we break above 133.45, which is a previous support level, which is now resistance, I will go and probably swing calls to the upside. All right, so these are your 1, 2, 3, 4 tickers that I'm looking for a week in addition to SPY. And just one last thing I want to look at is what the VIX futures is doing, so /VX. And we are in this consolidation zone, which is kind of a bull flag. And if you were to look at this on an equity, right, you would see this bull flag or a triangle, whatever you want to call it, and it's holding this daily 9. This looks bullish, which means that SPY, ES, and all the equities are very bearish looking. So I'm more inclined to be on the put side, right? We can see a potential retest of this daily 9 down here at 25.86, right? If we fell below this candle and wick off of it, touching this daily 9 kind of coincides with, if we look at ES, that we can bounce up and touch that daily 9 on ES and that supply zone and rejects, right? So everything kind of lines up. So those are the things I will be looking for. Hope you guys have a good week. Good luck trading. Remember, FOMC is on Wednesday at 2 p.m. That's when the minutes come out. So, manage your risk and best of luck. Talk to you guys next week.